Hey, strategic wealth preservation investors, it's Chris Vermeulen from thetechnicaltraders.com. I want to go over some monthly charts here of the markets, the stock market, what I think it's doing, where it's potentially headed, how it's going to affect gold, the dollar, and silver going forward. And let's jump right into the charts. Now, if we take a look, this is the SP 500 here, and this is the monthly chart. And it goes all the way back to where we can see the 2001 market top. We went into the multi-year bear market. And then we came into another bull market, and then we had the 2008 financial crisis and bear market. And of course, we had some other choppy times and a big correction here in 2020. And here we are back into another bear market for stocks. Now, to kind of walk through this, let me just kind of cover how the markets move in general. So if we take a look at the markets move, and this is the same for precious metals, in 4 stages. You have a stage 1, which is a basing formation. It means it's out of favor, it's trading sideways. It's usually you want to avoid anything in a stage 1. Now, stage 2 is the advancing stage. This is a bull market phase. And then we have stage 3, which is usually a high volatility, sideways choppy type of market conditions, very tough to trade. And then we have a stage 4, which is a bear market. Now, right now, the stock market, I feel, is in a stage 3 on the verge of starting a bear market to the downside. And when that happens, we're going to see a lot of panic selling. We're going to see investors start to have forced liquidation for margin calls. And of course, if we were to take a look at what the emotions are of the market participants, right now, I think a lot of people are still very complacent. The market's kind of had that first major pullback. It's trying to find ground here. And if it breaks down, we're going to start to see anxiety. People are going to, be in denial that, the markets are collapsing. They're stuck in the middle of a big bear market. Eventually they panic, and then eventually they'll get out near a bottom or delay their retirement substantially. So this is the kind of area where we are potentially flirting with the stock market, and it's going to have a direct effect on what precious metals are going to do. Now, to help kind of confirm that we're in this top area, if we were to go and look at what sectors have been performing, typically this blue cycle here is the stock market cycle. Now, it will top out before the yellow one, which is the economic cycle. Typically, money can front run. They can see things slowing, so investors get out of the market before the economy rolls over, and we'll usually see the stock market put in a bottom before the economy puts in a bottom, because they can see light at the end of the tunnel. Now, we've seen energy stocks do exceptionally well in 2020, 2022. Precious metals are now holding up very well. They are the best sector in terms of stocks right now, and that usually happens at the top, late stages of a bull market cycle. So we are about to come into what I think is going to be a big downdraft, and when that happens, it's going to pull everything down with it, including precious metals. So, for example, we're just take a look at this chart. We eventually saw the market go into a bear market. It broke down through here. This is more or less the stage 4 decline. We saw the same type of thing happen over here. The market put in a top, lots of volatility. It looks very small just because it's dwarfed by this big 12-year rally over here. But then we got into a stage 4 decline. And we had a big panic selling decline over here with the COVID. And of course, we are more or less, the way this chart is, the way I see it, is you could argue we're here or here in terms of the stage 4 decline taking place. And the decline, I think, is going to be a much bigger decline than a lot of people think. So that is kind of where we are in a nutshell of where the markets are. Now, if we were to throw the gold chart down below here, this is where things start to get a little more interesting. And we can see what we've got here is during a bear market in stocks, it's dwarfed here, but gold trades down and sideways. And later on in a bear market, precious metals are usually one of the first sectors to start to rally. So it started to move up even though the stock market was moving down. And then we went into this huge rally into the 2008 financial crisis. And then, of course, when the stock market broke down and we got into the stage 4 decline, gold corrected 34%. Doesn't look like much, but it was a pretty decent correction. And it's simply because there's lots of liquidation. People are forced to sell, margin calls, and eventually they just get nervous that they don't want to hold anything. And then once that is over, we actually saw gold bottom out about 3 months before the stock market bottomed. And then we went into that second big move to the upside. And this whole phase right here is a commodity kind of super cycle. And what is interesting here is we are entering another commodity super cycle that more or less I think has actually started somewhere back over here, and it's going to continue forward for several more years. Now, the only catch here is that we're probably going to see the stock market pull back, and that means we're probably going to see gold continue to struggle and fade sideways or lower for a little bit longer. But after that, we're going to see gold and silver and miners continue to go a whole lot higher. If we were to just actually pull this chart back, and we can use some Fibonacci extensions, which give us a really good idea of upside targets, we can take a couple different levels here of where the momentum of this chart pattern is taking us. And if you've been following my work for any length of time, then you know I love Fibonacci extensions. They work exceptionally well. And the reality here is we've got the rally all the way up. We came all the way up into this market high. Actually, sorry, let me just undo that here. We came all the way up to this market high here, which is this line, and then the market corrected down, and then we can take this low, this high, and this low, and it forecasts forward where the momentum is based on this momentum, where it should go. And this is the 618 level, and the way it works is if we typically hit 618 and then pull back from there, we almost always go and hit that 100% measured move. And if I squish this chart down, you'll be able to see where that is. So the next big move, once this market corrects, is going to go back up to around 2,700. So we're going to see a pretty big rally to that level. And the question is when will gold find the bottom and start to rally? And I think it'll be late this year. Gold will continue to struggle. It'll trade sideways or lower, but then it's going to start to run and take off to this level. Now, after this level is around 3,500 will be the next upside target. But we're having a super cycle in terms of very similar to the 2001 low in gold, meaning this is just the start. This is just the first target. From here, it can start to go in leaps and bounds to the upside, 3,500, 5,500. It can really pick up speed. And silver is going to do much of the same thing. If we were to just flip over to the silver chart, silver's got much of the same moves as gold. It more or less rallies at the same time, pulls back at the same time. It's been consolidating and trying to build this launch pad, and I think we're still going to continue to see metals struggle for a while for most of this year potentially. But then we're going to start to see it take off, and I think $50 and beyond is going to get hit for silver. I think there could be a very big unwinding event in the silver space. I mean, a lot of us have been waiting for that for a long time. Decades for the big squeeze, but who knows if that'll happen or not. But either way, the charts are pointing to dramatically higher prices. But I still think we are 6, 8, 12 months away, I think, from the new uptrend really taking hold and taking off. But it is very exciting because the scenario that we had back in 2019 and more or less over the last couple of years is almost identical in terms of the analysis, the super cycle resetting again, as we saw in 2000, 2001. And we just have to let it work itself out before it starts the next big rally. So I'm very excited for physical metals. I'm hoping we can get more of a pullback and pause so we can accumulate physical metals. I think owning physical is the way to go long term because this is the next start of another 5-10 year rally in precious metals. And we already know how difficult it is to get physicals. So if we see gold sell off and move lower, I think getting our hands on it and storing it is going to be huge because there are going to be some massive premiums down the road when when the masses want gold and silver. And the good thing is they'll all want it after it's had a rally of 100, 200, 300% to the upside. And we can gladly unload some of it to those investors that are late coming to the game. So anyways, that's the overall view. Again, the stock market, I think, is going to be in for a pretty rough ride. I think it could potentially last. I hate to say this. We could see a very weak market and economy for potentially a year or two. And it could drag out a lot longer than people think. And we will see precious metals be one of the first commodities to put in a bottom. Let's actually take a look at the dollar. Let's compare the dollar index to where we are right now. Now, last time we saw the dollar get up here, it was a big rally all the way up to the 116, 120 area. This big move up here and this volatility is very similar to the setup we're starting to see over here. We've had a big move up. I think we're going to continue to see the dollar chug on higher and get back up to these lofty prices as the stock market sells off. And of course, that is going to put downward pressure on commodities, especially gold and silver. But once we see the dollar put in a top and the stock market is getting close to an end, that's when the dollar starts to break down. That's when gold is going to pop and start that rally, and we're going to see the whole reset event again. We've been waiting for this since 2001, more or less. So we're looking at, this is a 20-year cycle, and another opportunity where these precious metals can rally hundreds of percent. Gold miners can rally thousands of percent. We're not there yet, but we are getting really close to kind of like a once-in-a-lifetime opportunity. If you missed the first one, you'll have the opportunity to hopefully get in on the second one. So they're pretty exciting times when it comes to the precious metals space, but there's going to be some pain, I think, for a little bit longer. Again, these are monthly charts, multi-year patterns. They don't happen overnight. They don't happen in a quarter. They take years to unfold. And finally, we are getting really close. I think we're, within a year or so striking range of a major start of the precious metals rally. So anyways, that's it. Hopefully that gives you some insight of the big picture of precious metals and potential near-term pain, but the long-term gain that could be coming around. Anyways, take care. Again, I'm Chris Vermeulen from thetechnicaltraders.com.